The RBI's annual report that came out yesterday, it suggests, to begin with, on the economic front, that India is going to grow at a sustained pace of 6.5% in the year to come.
In fact, 6.5 was the previous estimate, and that got revised to 7%, Shweta. So, that is actually contrary to what even the global sort of, Brent Woods, etc., have placed India's growth at. And if you remember, earlier this year, we were talking about a 6.2, 6.3, 6.4% range, and that got revised upwards to 6.5. But the latest that has come from the RBI governor is that India could very well reach a 7% rate of growth, and this again when the inflationary pressures start to ease, and we are looking at inflation to come down to about 5.2% this year, as opposed to CPI inflation hovering around 6.7% last year.
Right.
Now, there could be some spoilers and poopers in this party, and one of those could be the El Nino event. So, in case that happens, there's prediction of a normal monsoon. And again, we had reports earlier that there could be an El Nino, there may not be an El Nino, there could be a 94% or sub 94% below normal monsoon, or a 96% normal monsoon. But I think more or less there has been consensus now that monsoon is going to be likely, but an El Nino event may trigger a set of damage in crops,
Right.
and then the whole crop cycle could lead to higher inflation. But in the absence of that, 5.2% is the inflation that is pegged by the RBI for FY24.
Annual report. I'm looking at a number of 6.5%. Do you think that's a misreporting, or because from what I'm reading at the moment is that the report projected an economic growth rate of 6.5% for the financial year 24. So do you think this is misreporting then?
No, I'm not sure if it is misreporting or not, but the numbers that I had, it was 6.5% for FY23 close, going up to 7% for FY24.
Okay, so 6.5% for 23, the
That's
year
right.
that ended,
That's
and
right.
up to 7% for
That's
the
right.
upcoming financial year. All right, let me rope in Rakesh at this point in time. Rakesh, it suggests here an RBI saying that its attempt to tinker with inflation has resulted in sort of, positive outlook, growth of approximately 7%, inflation to remain under control at about 5.2%, and that is if the macroeconomic conditions don't change for adverse. We have a good monsoon, and there is no El Nino as is being projected by meteorological department, and then there is on and off report, of course, on whether there is going to be El Nino or not. But financial growth there looking good for India in the year to come as per RBI.
Absolutely. Morning, Shweta. Morning, Karthik. It's
Morning,
heartening to see RBI itself being in pink of health. It's given a dividend to the government. What government does with that essentially would spend on subsidies which are overflowing. But that's another day, another story. As regards the projections, I think what the RBI governor said at the CII annual function, I think last week, maybe earlier this week, I don't remember the day, but it was pretty recent, where he said that fiscal 23, we would do better than 6.5%, actually close at 7%, which is better than the IMF projection. And also for the fiscal 24, he has expressed hope, because obviously there are, the whole year is there right in front of us, and there are obviously challenges known and unknown. That also probably India would do better than the IMF projection, and the figure for that is 6.5%. So sustaining an economy at 7%, if we actually clock 7%, when we actually set up the entire numbers for the fiscal which has just ended, and also a 6.5%, possibly even better than that for fiscal 24. This is great news, especially for this particular government. We're going into elections. If you have a healthy balance sheet, if fiscal deficit, if GDP numbers are a key parameter for a government's P&L, in that sense, government and good news for the country and good news for the establishment.
All right, good news for the country and the establishment at this point in time. Another interesting facet of the report was with respect to the balance sheet of RBI, and that's also looking very healthy, closed at $63.4 trillion in financial year 23, Karthik.
Yeah, so the balance sheet expanding is great. It has a total aggregate of your assets and liabilities. But the growth that you see, which is 47% in the income of RBI, and that has gone up 47% to about $2.35 trillion.
Okay.
While it's been reported as, as an increase, which it is technically, but this increase comes on the back of RBI having sold Forex. And this is a function of depreciation in the rupee. the dollar pegged higher in rupee valuation, and when you sell a trillion worth of dollars, that becomes so $1 trillion of this $2.35 trillion is actually the sale of Forex, which happened last year, again in a bid to tame inflation. And broadly, of course, the liquidity suck out that happened on account of the rate cycle that we saw, the increased higher rate cycle. So again, remember, about 250 basis points has been the overall increase in rates in the last 1 year. And during that, of course, the liquidity that sucks out of the system goes into banks, gets parked back at RBI, sort of inflates the balance sheet.
Right.
But the increase in income is on the back of high amount of Forex, especially dollar sale.
Okay. A record dollar sale for that matter, to the tune of 1 lakh?
A little over $1 trillion.
A little over $1 trillion. Rakesh, you know, just the other day, and I'm reminded of the conversation that we were having, you know, with respect to RBI Reserves, and you gave a very interesting example of India and China and the difference in RBI Reserves. If you could, you know, once again throw some light on where RBI Reserves stand at the moment, and what is propelling RBI to, you know, get more and more reserves, get more and more money parked at central bank.
Well, I mean, you're right. Actually, there are two ways of looking at it. One is that RBI's balance sheet is looking good, but Karthik is right. It's essentially on the back of Forex deals where, you know, there can be a debate. Is it right for RBI to actually intervene every time and try and manage and hedge the rupee? So, I mean, if RBI doesn't do it, who does it? Market forces. So that's a bigger debate, you know. But if you remove that particular chunk from the balance sheet, that growth doesn't look that bright, all that bright. So in that sense, it's essentially on dealing in the Forex and, you know, selling Forex to sort of say stabilize rupee. But the other more stable and durable piece to my mind in the P&L is a contingency fund. There's a stipulated contingency fund which also has seen a growth. I don't remember the exact numbers, not very good numbers ever. But there is a growth in that, and contingency fund is a fund of RBI, like any central bank, is a great relief for the common man and also for any citizen of this country. That in case of any exigency where, you know, there are challenges which need to be mitigated, that contingency fund gets into trigger. As regards the larger conversation of what is it that RBI has, you know, as its key asset. So it's essentially Forex reserves, where they also, you know, include the gold reserve. That's also a denominator where it's included. We discussed last week that RBI is buying gold in a big way. So we have really a healthy Forex cover, if I can use that word. But when you put it in comparison with, say, China, you know, I think it's 1.6 trillion China has, and US is even bigger Forex cover. India is about 600 or 700 billion dollars. So in that sense, long way to go when it comes to comparison with China. What was contextual that time was, you know, we've been discussing repeatedly with Karthik, playing rightly, you know, the credit card charge or the travel charge when you travel abroad, the levy that has been put about at 20% beyond the 7 lakh limit. I was trying to point out, which is important to consider here in this debate, Karthik and Shweta, is that in China, for instance, the limit that a citizen of China can invest abroad is, you know, $50,000 versus India's $2.5 lakh thousand. So with the kind of reserves in terms of Forex that China has, which is much higher than India's, and the kind of limit that India has, which is 5 times that of China, the tendency and the need actually to sort of say supervise your Forex management as a central bank is very, very critical. We're not pardoning the, you know, the regulator and the government for putting that levy, which I think is avoidable because we don't know how much Forex it will save or how much, you know, and it will also bring about a lot of complications, which Karthik you have discussed at length. But it's important to put that, you know, perspective that India and any country or any central bank wants to keep a hawkish eye on the Forex cover that it has, because which is the biggest defense against any possible challenge. We know 1991 what happened. That story is part of the textbooks now. Everyone who studies economics or politics knows that we really had to mortgage our gold to secure our basic Forex interests.
Rakesh, if I can just ask you one question, you know, the annual statement of the RBI and Shaktikanta Das himself on record said that the government capex spending has been able to sustain GDP growth last year, but he's also hopeful that that capex spending is going to spur private investments as well. But given the hawkish stance that the RBI has taken and continues to hint on withdrawal of accommodation, so in the absence of rate cuts, now that inflation seems to be tamed at least to a point that it is within the RBI's threshold, in the absence of rate cuts, do you see private credit offtake happening at all in this year?
I think government has drawn a blank, so has the RBI nudge. Private sector capex, there has been a capex pickup. I don't remember the number right now, but they're not parking it in actual investment. So that's where there's a discordant note. And RBI governor is right in estimating, and the finance minister has repeatedly been saying that we have, at our part, invested so much. We are heavily invested in public expenditure, but there are limits to public expenditure because government has to manage the social welfare scheme, and it also has the, at the front end, manage the public expenditure, which is shaping up in highways, roads, infrastructure in a big way. I can say that, repeated pitches by the finance minister, I think some subtle hints by the prime minister, and the entire ecosystem in the establishment has failed to, I would use the word enthuse the private sector. I think they're still being very cagey, and it's time for all of us as media commentators, rightly or wrongly, I don't know what's your view, for private sector to really nudge them beyond a decent push and tell them that, boss, we are equal partners in this growth story. And India's entire GDP, 75% is in the private GDP. So in that sense, if they don't fire, the GDP doesn't fire. And if GDP doesn't fire, the India growth story obviously will not be able to sustain the 7% growth that we're looking at.
Yeah, so my view really here is that, in the absence of, let's say, cheap credit being available in the economy, which again is thanks to inflation, which you can't blame India directly for. I mean, there was a COVID situation, there was a Russia-Ukraine, there is a Russia-Ukraine war, supply chains are constrained. But all of that notwithstanding, FDI into India is slowing down. We've seen startup capital into India is likely to get taxed using the angel tax. So, the options available for the private sector to raise capital to invest back in, into infrastructure and big asset building is likely to be small as far as I see it, sir.
See, Karthik, this rate hike, has happened in the last few quarters. For that, we had a very healthy in the COVID era, and post that, the interest rates were very benign. They were very handsome and very pro industry in terms of, getting them to pick up credit and then use it judiciously. There is a contrarian point, but I think it's important for us to not get swayed. At the Davos meeting, the TCS, Tata Sons chairman, Mr. Chandrasekhar, he said that, we keep being pushed around and asked that why not matching the government level of excitement when it comes to expenditure. He said it's much difficult in private sector because there's a process. Government, there's a political will, and this government has shown political will, political appetite, and political risk-taking capability. A project, a DPR, a detailed project report, goes through a series of clearances, and finally the board has to look at the value of that, and it's not that easy. I mean, here's an interesting example that he said that while it's much easier for the government to take a quick decision and implement a huge sum of expenditure to be spent for whatever good, whether it's social welfare scheme or it is front-ending infrastructure growth. But for private sector, the process is longer. You have to do a real mathematical P&L on the outcomes that would come about. And all of us know that the private sector in particular is not yet fully impressed by, the stability in the overall environment, especially the linkage that private sector at large, especially the big companies, have with the global environment. So in that sense, you have to give them a little bit of a quota. But I mean, there is a decent time that has already come about, and I think it's time for them to get into that activity. Otherwise, it could also be an opportunity of them missing the bus and India missing the bus.
It sounds a little counterintuitive to me, sir. You say that, not you, you're attributing it to N. Chandra, who says that the government process is agile and the corporate process is bureaucratic. Seems a little counterintuitive, but yeah, we'll take his word for it.
No, I saw that. I can share the link with you. It was at the Davos session.
No, I'm not doubting your your statement. I'm saying it coming from N. Chandra. It just I'm sure there is merit in that, and it ratifies that agility is at the government sector and bureaucracy in the private sector.
I mean,
that concept sounds a little
sort of a role reversal there, sir.
I was myself surprised. But again, within corporates, there is a Tata culture. There is a
right.
Ambani culture, there's an Adani culture,
right.
where we believe that Adani put the fast move forward. And, Ambani is also expanding at such feverish pace. They're getting into retail, they're buying and they're eyeing anything and buying that. So in that sense, Tata's has also a historical context to
That's
the way
right.
they conduct.
All right.
And when they really did a good job of it, being really fast-tracked, nano, that didn't fire.
All right. Okay. We're going to move to another interesting take that is coming out of the RBI report, and that is with respect to bank frauds and fake currency in circulation.
That's the other counterintuition. Just when you thought bank frauds
Bank
are
frauds.
rising, RBI states that they're actually falling.
I'm extremely doubtful of. I understand these numbers are arrived on the basis of reported bank frauds,
Yeah.
Karthik, but we also know that not all bank frauds are reported.
But that would have been the case even in the previous year. Not
Right.
all bank frauds in
And this is the
FY22 would have been
data,
reported. This
right.
is data. So reported versus reported, assuming that the percentage of people who report is the same when you normalize it over a large data set, then if these numbers are to be believed, and I don't think we should have reason to not believe them, bank frauds have actually halved from about 60,000 crore levels to about 30,000 crore levels, which in itself
Are
is
we
still a very high
suggesting
number.
there are not many bank frauds, or are we saying that people who are reporting bank frauds, number there is declining?
No, I think it is the absolute value and volume both of bank frauds which has come down, because this trend of bank frauds, if you remember, started maybe in 2018, 2019, and that is when it picked up steam. But over time, I think the crackdowns that have happened, you understood the modus operandi, public is a little better educated, so maybe there is merit in looking at these numbers objectively, because number of people reporting bank frauds, if anything, would have been lower in 2022 and higher in 23.
Okay.
But the value of bank frauds has halved from 22 to 23, which means there is some merit in this argument, I feel.
Okay. Interesting argument, and not just with respect to bank fraud, also fake currency notes. There were approximately 91,000 pieces of fake 500 rupee notes detected in financial year 23,
Yeah.
as opposed to 2,000 denomination that decreased by 28%. That's largely on account of the fact that
It was lower
there
in
lower
circulation
number
in
of
any case,
lower
true.
number of 2,000
But
denomination
on bank frauds
notes.
as well, Shweta, just to add another point, interestingly, it is the loans which are the biggest contributors to bank frauds. So
Okay.
easy loans, cheap loans,
Right.
or BNPL kind of schemes. So these immediate loans that are promised to be made available instantly are the largest chunk of bank frauds.
Right.
And if you look at the data a little more, in granular detail, public sector banks have reported the highest value of frauds, value in terms of rupee value denomination, whereas private sector banks have reported the maximum number of instances of bank frauds.
Right.
So I think the big ticket frauds are taking place on account of public sector banks, but the number of frauds, the smaller 100 rupee, 1000 rupee, 5000 rupee frauds are possibly happening in private sector banks.
Okay.
But the biggest chunk, lion's chunk, is these loans which are promised to be dispersed immediately,
Right.
and some fraud on account of that.
Okay, so Rakesh, it does look like government's attempt to curb these websites, easy loan, and such apps which were a lot in number have come down drastically now. It seems to have an impact on banking frauds, which have declined massively on the back of government's attempt to crack down on these easy loan apps.
But still, even within this reduced half, 30,000 crores, loans is the biggest.
Loans is
chunk.
still the
Yeah.
biggest.
Yeah, so I would imagine, Shweta, I haven't looked at the numbers. One needs to do a little fine print on this. What is important is that RBI, as a central bank, must redefine what's a bank fraud. In an era we are living in, this bank fraud becomes a very loose term. So one has to look at and incorporate all kinds of frauds, from the jantaras, which also use payment gateways, so that ambit has to expand. And if the ambit is not fully expanded, that's why probably the concern that you raise at one level, it looks like the frauds are rising, but maybe RBI is not able to capture them as they're happening. And it's good news, the government has gone after, the banks have gone after the KYC norms. In that sense, they're looking at cleaning up the loan segment, which Karthik is right. That would probably forever be the biggest, component of these frauds. People just run away and, they take loans and they're not seen to be where they're gone, because there is some amount of intervention, what we call phone banking, as Modi ji used to call it. But that's a permanent feature, you really can't do away with that intervention, which is external. There are other set of data which have come in the last few days. where actually UPI transaction frauds have increased. At one level, UPI is like, the beacon of hope, and it has actually become a trendsetter globally. But what is also happening is that even UPI is facing and observing those challenges. So the fraudsters are, one step ahead of, as we have noticed in cybercrime, and the linkages between the white collar crimes and actual criminals at the tier 2, tier 3, tier 4 cities and rising up to the big cities is phenomenal. And I think that excess is really something that is not necessarily in the remit of RBI to control. It is the law and order agencies which need to keep an eye out on that.
Right, very interesting there. Would UPI frauds be construed as banking frauds? Because if that's the case, we've seen a massive jump in UPI frauds, Karthik.
I think technically yes, Shweta, because your UPI is linked to a bank account. So whether you look at being duped of, let's say, a credit card transaction or a cloning of an ATM or even a UPI, any of these transactions at the end of the day are linked to your bank.
Right.
So I feel these would be categorized as bank frauds.
All right. So we need to look at larger definition, of course, of what is a banking
but
fraud.
I think
there.
these BNPL schemes or easy loans, unless there is a bank link transaction, which again would happen actually. Sorry, yeah, I think that would still happen.
It all involves
if you're
a bank.
making a payment to somebody, it does involve a bank again.
Banks are involved at all times. But interesting figures there. It appears that banking frauds have decreased both in value and in number, although despite every evidence to contrary that we keep hearing about of massive increase in frauds on a daily basis.